Alright, so in this video, I'm going to explain to you how I analyze the higher time frames, so the monthly, the 3-month time frame, in order for me to create longer term biases on FX majors such as Euro USD and Pound USD. And we're going to be looking at the DXY to understand sort of what price is doing and what we can expect for price in the upcoming quarter. We've just entered Q4, so beginning of September. And so this will be interesting to see what we can expect for this next quarter. So I'm just gonna reduce my camera size right here. And now we are going to dive deep into the analysis, right? So I'm starting off on the monthly time frame. As you can see, this is the DXY. So if you guys don't know what the DXY is, it's basically a representation of the dollar. So on Euro USD, we've got the euro against the dollar, and here this is just mainly focused on the dollar. Okay, so let's look at this chart. Okay, the main thing that I would like you guys to look at is basically in the last 2.5 years, right? So this sort of area right here is our main focus on price right now. What we can see is a textbook accumulation, manipulation, distribution, right? So we've got accumulation here with liquidity being built on both sides. So here and here, we've got equal highs up here and then equal lows down here. We've got the manipulation. So price creates a large run up, manipulates these highs, mitigates the extreme zone of this overall swing structure. So I will be diving into the triple market structure once again in another video, but what I want you guys, I'll just explain this very briefly. It's really going to help you out, okay? So often, or always, you have different types of market structure, okay? You have the larger market structure right here, and then within this market structure, you have internal structure. And you can use both of these types of market structure to your advantage by analyzing the charts, right? So this is our swing market structure. So swing low here, swing high. And then within this swing market structure, we've got an internal breakup structure. So internal strong high, internal weak low. I'm just going to use this to really make this clear for you guys. Bear with me here. Okay, so swing market structure once again, swing strong, weak high, and then within the swing structure, which I'm going to make like 2 pixel size, we have the internal structure. Okay, so this is the breakup structure, this is the internal strong high, internal weak low, swing strong low, swing weak high. I've learned these concepts from Photon SMC, okay? So go look them up. As I was saying, accumulation, manipulation, distribution. This is the candle that has marked the start of Q4. So we can mark this out. Q4 open. This is the candle that marked the start of the year. So what we saw is, right, Q4 of last year, so started in September, basically manipulated price upwards into this monthly zone. Then we got inversed fair value gaps, leaving BPRs, so really strong bearish pressure. And now what we've done, right, in August, is we have tapped back into this overall buy before the sell. So this overall, right here, this buy before the massive sell down. I'm going to show you the 3-month time frame, and you'll be able to see, looks, right? So this is the quarterly candle. It's just tapped into that, and now it could potentially reverse to the downside. And when you look at candle anatomies and how candles form and all of that, usually the main move happens in the last part of the candle. So the beginning candle could sort of show slower price action, etc. And then the real move, and the most important is how the candle closes, right? Could happen in the end. So we opened up down here, we sort of pushed up slowly, creating this high, and now we're starting to reject, so price is pushing lower, and then we could see bearish price action, okay? And that's exactly what I'm expecting on the dollar index as of right now. Same thing that I've just explained to you on the 3-month time frame, we can apply right now to this monthly candle. So we've opened, we've pushed up higher. So open, pushed up higher, and now we're starting to push lower. And so I am expecting for price to continue pushing lower and run out this week low right here, okay? So that was the monthly analysis. As I've said, very, very obvious bearish pressure. We have inverse fair value gaps, so what we call BPRs, and we have price just continuing to rally lower and form bearish price action. Now let's go to the weekly time frame. On the weekly time frame, I've marked out once again the swing structure. So again, this is the higher low and the higher high of the swing structure. Then the internal structure, so within the swing structure, you can see we've had multiple breaks of structures, all of that. This is my internal strong high and my internal weak low. So internally, we are bearish. Swing perspective, we're bullish. Now, because we're on a weekly time frame and the swing break of structure is from April 2022, this is our main focus right now, what price is doing right now. And it's not complicated to understand what price is doing, okay? We're respecting bearish fair value gaps, right? This is a bearish fair value gap. It's been respected. It pushed price lower. It broke this low. We are sweeping highs, as you can see. So highs are holding, lows are being disrespected, are being broken through, sorry. And right now, we have had 4 weeks of price action that has failed to do anything bullish. And this could be the start now of bearish price action coming down into that week low, okay? So that is basically the weekly time frame. I'm going to jump back to the monthly time frame once again. And because I forgot to tell you guys that there's a misconception on how ICT concepts or whatever concepts you call these, liquidity concepts, etc., or any concept doesn't really work on the higher time frame, or it just doesn't matter. We're not interested on it, like on the higher time frame. No, okay? The markets are fractal. Everything that happens on the monthly time frame works the same on the minute time frame, on the 1 minute time frame. It just takes more time to play out, okay? And the importance of these fair value gaps and BPRs and zones and areas of interest are much higher on a higher time frame, okay? The monthly time frame, so I'll make this bigger. The monthly time frame is superior to the weekly time frame, which is superior to the daily time frame, which is superior to the 4-hour time frame, which is superior to the 1-hour time frame, the 15-minute time frame, the 5-minute time frame, the 1-minute time frame, the 1-second time frame, okay? Many of you guys will probably know this, but basically all I'm trying to tell you is the higher the time frame, the more important it is. So when you start off with your analysis on the daily time frame, trying to understand what the daily bias is, what you should be doing is going back up one time frame, looking at the weekly time frame. What's the weekly time frame saying? How do I understand what the weekly time frame is saying? I go to the monthly time frame. How do I understand what the monthly time frame is saying? I go to the 3-month time frame, okay? Alrighty, so I'm not going to jump down to the daily on the DXY. I'm going to focus on the euro here because this is what I'm trading mostly, right? This is basically what I'm trading with the pound and the German index, the DAX, okay? So as I've just explained, dollar, we are very, very bearish. There's no sign of bullish intent at all. So because the dollar and Euro USD are inverse, so we're bearish dollar, means we're bullish euro, and we're looking to trade Euro USD up higher. Okay, we have liquidity up into here, resting highs up into here. We've got a 3-month fair value gap up into here, which could be the next target for price. But yeah, basically for the rest of the month, I'm looking for higher prices on Euro USD. Let's jump down to the weekly time frame. I've already explained this in the previous video, but I'm going to go over it again because it's good to have the repetition going, okay? Weekly time frame, we mitigated discount of this internal range. So obviously swing bearish. Internally, we are bullish. I haven't gotten to the third type of market structure, but it's not really important just yet. So we've swept internal liquidity, previous weekly low. We have failed to close below this candle, and now we're just waiting for the delivery to the upside. It's a market maker buy model if you guys are trading ICT. So original consolidation, smart money reversal, and now we're going to distribute up higher. This is the main target for price once again. So this target right here is the same as this target for me. We want to see higher prices breaking up this high and ultimately and potentially coming up into these highs. Not this week, obviously. We're not going to get a 1,000 pip candle this week. But my analysis and bias is bullish. Now let's go down to the daily time frame. Daily time frame. Swing bullish. Internally, we are bearish. However, the internal structure shifted bearish to mitigate the discount of the swing structure. And so we understand that the internal had to switch bearish in order to create the pullback of the weekly time frame. I'm still bullish. This is where it'll get interesting. Okay? I've marked out this BPR right here. So this is a balanced price range again. This is an area that price could be attracted to and reverse to. This is like basically we potentially have resting orders within this level right here. Okay? And I've marked out the daily demand as well. I've marked out the weekly open, so where the weekly candle is opened. So far, we've opened and created a high. So my analysis is still bullish, right? But a perfect bullish scenario is for Monday, right? As we open, we trade lower, and then Tuesday, whatever, we sweep Monday's low, and then we just create the high of week and close, right? So this isn't what happened right now. I'm still keeping an eye on this fair value gap right here because we have CPI, I think, on Thursday. This week could sort of be a consolidation week again. So if we go to the weekly time frame, these previous weeks haven't done much. So is this the low of week right now? Monday's low? I don't believe so. I could be wrong. We could just literally see the expansion up higher, which still matches our bias, and this still could be a trade that we could take in line with that bullish bias, targeting up to this high. But for now, I still have eyes on this, on the Monday low, right? I want to see price trade below Monday low and then expand higher, and we'll see that on the 4-hour time frame, this is very possible. This is sort of my overall range on the 4-hour time frame. So let's mark out the OTE. Oh, not in that color. The OTE right here, right? So we've got discount below the 50% level. We've got OTE, which is basically just a stronger level in discount that often causes the reversals. So often price will create a high, come back down. There's 50% level, but it might stretch all the way into OTE and then do the reversal higher. This for me would be perfect liquidity to be swept. So this would be inducement of short, because what happens when if price trades below this? Now you get head and shoulders pattern. And so retail are going to have stop losses above here because they're going to be bearish. They're focused on the 4-hour time frame. They're focused on the 1-hour time frame. They're not focused on the monthly time frame like I just explained to you. So sentiment could shift bearish, right? And there could be many stop losses up here. When there's many stop losses at a certain level, price can often rally towards it very quickly once it's mitigated what it has to mitigate. So as I've just explained to you on the daily time frame, previous daily low down here, we've got strong confluences in here, right? We've got the BPR, the overall demand range, and we've got liquidity just above all of that, which is this 4-hour liquidity low. So what I would like to see in the upcoming days is for price, like this is the ideal scenario. Again, it might not do this. We're bullish. We could just continue expanding higher, smash all of these targets, which is great, and we could still trade in line with that. But for right now, the cleanest scenario for me would be for price to still trade lower. I don't believe this is a low of week. With all the news coming up, it'd be surprising that this Monday low is the low of week. It would be perfect for price to create a head and shoulders. We know it's not going to be a strong one, or at least we expect it not to hold because of a high time frame analysis. To come down, sweep this low, mitigate the daily BPR, which I will just mark out on the 4-hour time frame as well. So right here, surprise, surprise, it is literally just at the discount level. We've got all of these fair value gaps within here, so the 4-hour fair value gaps, and then we could be looking for longs in line with our bullish bias based off of the monthly, the weekly, the daily, etc. Right? So that's essentially what I'm seeing on the 4-hour time frame right now. Let's drop down to the 1-hour time frame. Let's drop down to the 15-minute time frame. I don't need to look at the 1-hour time frame. This is where it gets interesting as well. So we have so many resting lows in here, what we call low resistance liquidity. Basically, heaps of potential stop losses within all of these levels. So if I just mark out the lows just so that you can see. Monday created bullish price action. And now we could potentially come all the way down into here and then boom, rocket up higher, right? So I am sort of short inclined for a pullback. This isn't the highest probability trade of the week because we're obviously bullish, but I do want to sort of see all of these lows go. I want them all to be taken. I still have marked out the NFP low, right? Data highs and lows are usually a magnet for price, and price could come down and sweep this low before shifting up and pushing up higher, right? This is basically my analysis for Euro USD coming up into the rest of the week. Monday, as I've explained, I think on my weekly breakdown video, I don't usually trade Mondays. I tested a short up into here, got stopped out in profit. It was by testing, I mean it was a demo trade, because it didn't match my edge, and so yeah. So this is basically how you're starting to understand how I view the charts, right? And something that I really want to get into and really start understanding more are fundamentals of the markets. So I do think that I really have a strong I do have a very strong technical analysis skill now that I've developed in the 2.5 years that I've been trading. But now the two areas that I have to work on is executing in line with the bias, and then I really want to get better with fundamentals, because imagine if I could pair all of this, so having a strong high time frame bias formed through technical concepts, and then you have the fundamentals backing that. That's when traders want to be risk on, right? And often the really good traders out there use both technicals and fundamentals. A trader that I really like and think you can really learn from is JadeCap. So JadeCap, if you're watching this video, just kidding, he's not watching this video. This channel is too small. But maybe eventually, you know. But JadeCap is really good at pairing both. So he does often talk about high time frame biases, so quarterly biases and all of that. And I did sort of learn that from him as well. And so thank you, JadeCap, for teaching me all of this. Now it's going to be my turn to sort of explain how I do it as well with different concepts and stuff like that. But yeah, this is basically what I wanted to share with you, right? We can use higher time frame fair value gaps and zones and all of that to create a higher time frame bias, like really high time frame bias, and it just makes everything so much more clear for you guys, right? If you understand like what the highest of highest time frames is doing, and you just trade in line with that, you trade in line with the order flow, you're trading in line with the market, you're following the trend, and that is something that can bring, you know, great trades to you. So yeah, this is the second analysis video, and we're going to dive deeper into it. In the first part, I shared, do I still have the notes? Yeah. In the first part, I shared direction and bias. So today we sort of went into that even more. The next part is going to be using Forex Factory and mechanical entries that are data related. And then, yeah, basically just timing. Let me see if I can actually, yeah, let's go. Let's go. Let's just do it now. I don't see why I wouldn't. So this is how I basically approach the week as well. So you pair everything that I've just explained, so technical concepts, and now what I'm doing is I'm looking at the Forex Factory, so all of the potential news coming up, and I'm looking to see what days are tradable and not. So what I'm doing here is I'm pairing data. So my data says that Tuesday is my best performing day of the week, which is today. Monday and Friday usually less. Well, I'm just less inclined to trade because data isn't on my side. And then obviously high impact news days like CPI are not tradable for me. So yeah, so this week, for example, we see Monday we've got no news, so I skipped that day. Tuesday we've got no news, but it's Tuesday, so I'll potentially be trading today if I get a setup. Wednesday, PPI. Again, I only trade London, so I'll potentially be looking for a setup. But, I'll be aware that the following day, CPI, so it could be very volatile moves already coming into Wednesday. And then Friday, we could be trading after CPI, so either following the momentum or depending on what CPI does and depending on how this weekly candle is forming, CPI could be a manipulator, like it could cause a manipulation, could cause a low of the week, and then Friday we get a distribution up higher. So just all of these things sort of depend, right? And then depend on how the weekly candle is forming. So I think that's going to be it for this video. This was part 2 of how I analyze charts. There's going to be heaps of analysis videos, and if you basically learnt anything from this video, drop a sub, drop a comment, all of that. It really helps out my channel. I'm basically going to try and I want to build a community of data-based traders and traders that I basically think that the space is really, really, really polluted, and you have heaps of fake gurus and all that, and we all sort of know this, right? But the problem with knowing this is I still feel like there are so little people that are actually producing great content. Like JadeCap, I think, is producing great content. Photon SMC is producing great content because they're just teaching really valuable technical concepts. I don't know if you guys know Nick Trading. So he's focused on fundamentals as well. He's been trading alongside people that have been trading for 20 years. He doesn't use the same concepts that I use at all, but he's got the Edge Finder, all of that. Who else? That's basically the main people that I follow at the moment. And so yeah, this is it for this video. I'll see you guys in the next video. I'm going to be making videos on how I look after my personal finances, because this is like, at the end of the day, this YouTube channel is tracking my journey. So again, I'll be explaining how I invest into ETFs and crypto and dollar cost averaging and all of that. I've only started it recently because I only just turned 18 11 days ago. But time is my biggest asset at the moment because I'm so young. And if I use my time wisely and I invest wisely and I manage to be profitable with trading and reinvest into real estate, crypto, ETFs, stocks, bonds, all of that good stuff, I could really become very successful, right? Thank you very much, and I'll see you in the next one, guys.